A microphone check and screen share check, please. I thought that was my coffee cup. All right, good evening, guys. Nightly strategy podcast for Tortoise Capital for July 15th, 2022. We'll start, as always, with the market health check. Well, we finally got the bounce that was needed on the long side. So we had tested the Bollinger Band mean, and instead of continuing on to the Ranger objective up here by fair value, it gave us like a 5DD, came down and tested Z-1 instead, and the rising PSAR. And we said there's the test. And today it gave us a gap up, and then a strong close going into the finish at 385 on a relatively small daily range. Has gotten back to the Bollinger Band mean. So that's a pretty good one-day recovery going into a weekend in the hot summer. You can't really ask for much more than that on the long side. And so that is still going to be a critical state. What's that going to do? Is it going to move on or roll back? If it hits the 10-day low, what's it going to do there? Is it going to come down and test the 30 and 150-day low? If so, large move to the downside. So the upside, it has to get through this little island right here. Notice there's a gap and a gap, and this gap is what has been acting as resistance. It has not been able to get through that. But if it can get above this little gap, this island of resistance, then this is free and clear. So that's going to be the test next week, is getting above the 10-day high, 20-day high, and then above this resistance here at about 395. That's the real test right there. So if it can get to Z1 at 400, that's going to be double plus good. And that's what remains to be seen. So that's about, from 385 to 400 is a $15 move on 385. So that's about 4%. It has to make about a 4% burst to really be good. And then the downside is easy to see. If it falls through today's low, that's also the belly of the dragon, and you would be entitled to see that as a collapsing dragon. And then we would come over to here and we'd see the PSAR as a key level. The belly of the dragon is a key level. The next one would be the 30 and 150-day low, and that's essentially this collapsing dragon. So those are the key price levels on the downside. And then if it breaks through 360, it's look out below. So this makes a very interesting critical state to contemplate going into the weekend. We're in bearish normal, so not carrying overnight risk, ready to play large volatile moves in either direction. Doesn't hurt my feelings at all. So I got a new teaching partner today, and really a squared away lieutenant colonel in the Army. And he says to me, "Hey Doc, are you in the market at all?" He wanted to talk about the stock market and what so I have to be careful on how I talk to my guys about that. right, let's look at the sectors. So the S&P was up 1.9 today. The Russell was the best at 2%. Diamonds were strong at 2%. The Qs were lagging a little bit at 1.8. Treasuries and emerging markets were up 0.56 and 0.52. So really, not much to complain about there. Here's the cutoff line to those that were in the negative territory. So let's see what underperformed today. So again, the S&P 1.91. So the FANGs and blockchain 1.8. Then a great big cluster. These were all in the positive zone, but they were underperforming. So tech, real estate, energy, discretionary materials, lumber, Brazil, blended commodities, biotech, oil, and wood. Then the Aussie dollar was only up 0.77, agriculture up 0.67, then ARC Genomics 0.4, staples 0.3, and now the true losing positions today. Clean energy, lithium, wheat and precious, marijuana, and VIX. So this minus 3.49 in VXX is a strong signal for continued follow through on Monday. So we'll watch for that. We'll be ready for that. Underperforming targets, Tesla up 0.74. It closed at 720. So that's good, but not as good as all of this. So this is kind of a disappointment. Apple and Microsoft, which led the way earlier this week, we're just kind of continuing to grind at about 1.15 and 1.5. So a little bit of faint praise on that one. All right, the outperformers, let's look at that next. Again, here's SPY at 1.19. So we have this cluster here, ARC Innovation, Mexico, and oil exploration, 2.3 to 2.5. Global Future of Finance, Bitcoin, and Simon Property Group, the commercial real estate, from 2.5 to 2.9. Finance, very strong, 3.38. That was a good tell today, a good signal for a nice move in Citigroup, which we're going to go take a look at in a minute. And then finally, another strong day in crypto, especially Ethereum, 7% in the blended large cap crypto, and the Ethereum Trust 6.8. Individual companies that did well, PayPal and Squarespace in the financial disruptors, but also Alcoa, 5.5. So that was the leading candidate in the metals. Cliff was also pretty strong today at 3.25. You have Devon Energy and Rivian, 2.5. U.S. Steel, 2.25 to complete the trifecta of all the metals. There's Cliff, Alcoa, and U.S. Steel, all well above the S&P. And then Robinhood at 2%. So a pretty good range of things that were better than the market. But I think I'm most happy with the Russell leading the way. And I think finance. That's where the strength is right now. This was the tech was not very persuasive today. Not as strong as it could be. When Tesla, Microsoft, and Apple were lagging the indexes, and the tech indexes were lagging the market, that's actually not a good sign for tech. There were some other things that helped, but mostly finance. in terms of being large caps that can move the market. The steel companies are not large enough to move the market by themselves, so they really are a separate entity unto themselves. All right, let's take a look at the weekend reports now. Still bearish normal. This little move today helped bring the market up out of the doldrums. The risk Z is more confident than I have been about the possibility of the upside. It's still there. The ETF2 exposure remains at 0% because all the big indexes in the world are still below their 4-month moving average. Looking at the multi-time frame lens now, here's our monthly. I'm using the simplified sniper chart on this one. I kind of like the how you can see the indicators so nicely. Here's where the PSAR flip occurred at 4:30 4 months ago. So we've been on warning for the last 4 months. That whole downward move is taken under advisement because of that warning signal right there, which alerted to the upside back here at about 300, which alerted you to this. And then this rolling over is the first warning. Coming out of the dragon is the second warning, breaking the PSAR third warning, and that's what happens next. However, what we like is this 1, 2, and now if we can get, when this is July right here. So if July can finish well without testing that low, and then August starts to move out, that would be a 1, 2, 3 on the monthly. And that would be a very positive sign. That would look a lot like this: 1, 2, 3 with a buy right there. And then that preceded the PSAR flip back in the day. So this is showing some signs of healing, not fully completed yet, but early days still. But that's promising. Now, when I look at the oversold, this has not upticked yet, but if we continue to get some goodness in here, this could become an uptick pretty soon. And then that's like a WMB3, but on the monthly. So we'll just keep that under observation. Feels good. The 9-day shows a little more indecision inside here. But you can see at least that it held support above 370. It did not fail further. It still has to get above, say, 395 and go, but we're getting close to that key level. So this is the discussion zone right in here between about 390 and 370. That's a $20 range, which is about 7% in this range right here. That's the tactical trading range that we're in, trying to navigate our way each day. Let's see, on the weekly, that's also showing that same kind of indecision. It did test this low briefly. The last few days have given a nice recovery. So now we're going to test is, can I get above this? Again, it's 390. That's the key price level. If it can get through 390, then 400 is the top of the dragon. 410 is the PSAR. This peak is about 420. That break is about 425. Peak of the dragon and the top of the RL10 all hitting in around 445. So that's like a little step ladder of incremental improvements that it has to climb that wall of worry. But that's what the upside targets look like. The downside is really the belly of the RL10 at 380, breaking that support at 370, and then look out below. So that 390 to 370, that's our tactical trading range inside there. That's crucial. Crucial support. Crucial breakout. That's the yellow zone of indecision where the tactical trades like intraday and maybe 1 or 2 days, hourly swings. This is the tactical space. And when you remember that we are in a bear normal, a lot of backing and filling is to be expected in this area. So until it breaches or breaks out of those, you don't have any directional indicator. Although you can see the dragon is starting to try to reverse and swing up, but it hasn't quite done it yet. But getting closer. Today didn't hurt. The 3-day is showing the extent to which this sideways chop, this bottoming process between 390 and 370, you can just see how that has been chopping around. Closed well, but it's not out of the woods until it gets above 390. That's what it has to do. Then here's 400, the next key price level, 410 and 420 up in this region. Okay. Let me know if you found that to be helpful in chat. And we've seen the daily. All right, we're taking a look now at the blended monthly rebalancing tables. Starting with the ETF 13. Again, if you needed reminding that we're in a bear normal, all of the indexes are below their 4-month moving average. So that long-term system BMR says cash. Treasuries, the only sign of joy, leaving crypto behind. But if you take a look at the blended, you can just see how bad the suffering is. There really is no place to hide. In the ETF 22, which is where we add the XL series, even energy has been weakening. There's treasuries again. So there are not a lot of safe havens. That's why the short-term tactical trading is indicated. There's no real follow-throughs yet until we get out of this bottoming process. So don't be impatient. ETF 32 adds a few more global sectors. And even there, not much love at all. Only treasuries. If I was going to say anything, consumer staples XLP is showing the least impact of the bear. I mean, that seems to be recovering the most. Healthcare and utilities, also the defensive sectors. Not a lot of growth, but it hasn't been losing money. That's about the best that we can say for it right now. But again, if you get that wrong, you could, if you're in the wrong one and because you believe in it, that's a good way to get smoked. So playing defense, short-term trading is indicated, minimizing your overnight risk, capturing the gains when you have them. It's better to have a bird in the hand than 2 in the bush currently. In the Dow 30, we're starting to see a few things that are favored, right? So McDonald's, Coke, some healthcare in Merck, United Health, Amgen, and Johnson and Johnson. Merck looks interesting. United Health, even Visa in the financial services. We saw strength in finance this week, so maybe that's where that's coming from. Walmart has been doing not bad as a staple. And Boeing has been a tactical play that has paid off as on sniper trades. The U.S. staples, that's the, your value plays have been above average, but the blended and the growth areas are underperforming. Bonds are making a little run right now. Blended commodities has still got some residual strength from energy, even though that has been suffering. It had such a head start that's been not bad. But still, hard to find long-term plays in any of this. We're seeing the numbers still being dominated by all the incomes, and then some selected commodities, healthcare and utilities, defensive plays. Play in defense. This is the table we use to find short-term trading vehicles that are a combination of very liquid, meaning that their daily dollar volume on average is large. These are the top 30 based on average daily dollar volume over the last 30 days. And the ones that have the most volatility as well are in the green. So here's energy at 4%, tradable. Biotech, tradable, 4%. Oil exploration and semiconductors, very tradable. Brazil, frog champion, tradable. And the gold miners, 4.25. So this is how we find the liquid symbols for shorter term trading. You need a lot of volume and a lot of volatility to make that work. Shifting to the daily, and here is the trade of the day today. And this one was, let me think, I cut the header off of that one. Just let me remember what that was. Yes, Citibank. Sorry about that. Let me pull that one up on this other screen. Yeah, so Citibank gave the alert today for two reasons from TC2000. First was that it had a really nice gap up. And XLF was the strongest sector. So the market started going up. The strongest sector was finance. The strongest symbol in finance was Citibank. So by this time, gap up and go. There's a Kata 2 or an emerging dragon. So that's a standard entry. Standard risk box, his R10 is about 40 cents. Standard exit at the PSAR dot. So if that's 1 unit of risk, that gives you about 2.5 R. I don't want to short the strongest stock in the strongest sector, so I don't take that as a short. I just watch and wait. And oh, it makes a nice kata 2 reentry, standard risk. Just follow it with a PSAR, exit, 1 unit of risk, 1, 2, 3, 4. So that's +4. This is +3. 7R, sniper trade of the day. Prepared to trade based on market and sector and target indicators with standard planning norms. Target selection, find the mover, trade normally. Yeah, C is Citigroup. Oh, yeah, we already saw the market health check. That's right. Dashboard number 1, still bearish normal. Got a nice boost. Risk on from risk Z. Intel, Merck, United Health, American Express, and McDonald's in the min pains. Alcoa, Chevron, Tesla, Caterpillar, and Travelers in the max pain. They're the furthest from their 10-day high. Handful of dojis today. A few auto framers testing out well. Travelers is interesting at 5-1. Chevron and Caterpillar are interesting, but no swing patterns to speak of. So mostly intraday, plus the auto framer is carrying the day. In the ETFs, also handful of dojis. No swing patterns to speak of, but a few auto framers. Here's gold at 11-1. Finance was strong today, up 3.6% as a sector. Oil exploration, healthcare is continuing to thrive. So the lack of red is really favorable. So this is all, the lack of signals for swings is arguing for patience. So we're looking at these symbols here that are better than 2-1 on the auto framer reward to risk, sorted by descending reward to risk. So oil remains interesting, blended commodities, Chevron, energy sector, oil exploration. So energy is where your focus should be for those kind of value plays. On the daily squeeze, a handful of squeezes. Tesla was such a low range day today that the squeeze is really setting up well. Its range stat is $50. So his R10 is going to be $5 for the intraday standard risk box. But there's your energy and tech and Merck and Johnson & Johnson. So plenty of high quality tradables on the daily squeeze that are ready to pop. Looking for the sniper trade setups from Sniper headquarters now, starting with our favored Godzilla setups from the S&P 500. Only CB is a raging Godzilla with a Z-score on the 5-day of 1.49. All of these other ones are stealthy Godzillas because the 5-day range and the 1-day range are less than 0 on volatility. So that is something that is sold off harshly and then has quieted down a lot over the last 5 days and 1 day. And now it's ready to make a big breakout in either direction. So stealthy Godzilla. Only CB is enraged. In the tactical symbol set, DBA, the foods, that has a greater than 1 Z-score on the 5 days. So that's an enraged Godzilla. The other two, Brazil and Cliff, are quiet, stealthy Godzillas, much like this. A goodly number of fireworks and popcorn here. All of them are stealthy on the 5-day and on the 1 day. So these are all symbols that have exploded up to the top and are in a holding pattern of sideways chop and quietude, ready to see, is it going to break up or break down? We didn't see that this week at all. The fence sitters are similar. We have 2 symbols, CAG and WAT, that have had large 5-day moves. These are ones that are stuck right in the midpoint at like the 50-yard line between their strong resistance and strong support. So we put a tight little bracket on there. And then if we see it start to break out with this as the unit of risk, we can see 1, 2, 3 on a strong move up to resistance or down to support. So these fence sitters are stuck right in the middle of their trading range and are ready, therefore, to be bracketed for a large move in either direction without violating the trading range. Now, it could get up here and test and then really go for the breakout, but there's a real tradable distance inside that trading range itself. That's what makes the fence sitter so interesting. These are the S&P most quiet symbols on the basis of the 5-day Z-score. And these are the most volatile on the basis, again, of the 5-day Z-score. There's your travelers. Citigroup, you can see just how powerful that move was today. That's why you want to find the movers. Finding the mover today in Citigroup was worth 7R. The market was rolling up. Finance was better and Citigroup was the best. And then we just trade the standard patterns in that direction. That's what we mean by find the mover. All of these sniper patterns are more likely to be movers because of their specific conditions. There's your auto framer stats for our standard trading, tactical trading set. You've seen that already. These are the sniper system stats for that tactical trading set, sorted by the 5-day Z-score. Notice that only DBA out of our entire stack is the only one that has a 5-day Z-score more than 1 standard deviation above average. And then only a few of them are above average at all. And then this is at the 0 line and down. It becomes exceptionally quiet down here. These are extremely non-volatile lately because their Z-score is less than -1. That's what makes U.S. Steel so darn interesting to me right now. You see Cliff is very quiet. U.S. Steel is very quiet. Alcoa has been very quiet. even though they're at the bottom of their sell-off period, the fact that they have gotten this quietude says maybe that selling is done and this could be a one-day bump. And that's what we're about to see when we look at the sniper trades of the day in the metals. So that's how you use this report to find things that are potential turning points. In the multi-time frame NDX, you can see that there were quite a few symbols with the breakout. The ones that are strong on the 2-day are interesting, but the ones that are breaking out on the 10-day are especially interesting. That's this one. And notice Walmart. That's the one really that should come to your attention. Walmart is the one that has the longest sustained breakout because it is also breaking out on the 30-day box. And then you also are seeing some strength in Procter & Gamble, Boeing, which has been really strong, Merck and Apple, and McDonald's. That's telling you who the emerging leaders are. In the same way over on the ETFs, it's healthcare, staples, treasuries. All this other stuff is just lagging. And then diamonds and tech starting to look a little better. So you, as we see the bottom end and things starting to recover, you're going to start seeing that strength move this direction and turning some of this red and yellow into greens. That's what you're seeing in Merck. Probably this, the strongest of all those Dows, right? Because he's in the top of his trading range. Sorry. God, it looks like I'm drunk. Drunk with excitement. So 97, 96, 94, 104, 126. He's really pushing the peak of all his different look back periods. And McDonald's is not far behind. Right. So that's how you can find that relative strength at a glance using the color codes for all the Dow symbols and then all the ETF 30. Let me know if you found that helpful. Yeah, IBM is also, as my brother points out here, is kind of interesting too. Some residual strength, some good intermediate strength, and some short-term strength as well. The slope of the 30-day regression line of the market, that's this one. Notice how that little recovery and rebound has made the parabolic turn and start to roll up. So that's an accelerated slope line that gives you, it gives some credence to the idea that this was a turning point, that it's not going to come down and test 360, but that it's almost like a cot of two trying to go. The slope of the straight line is here, but the parabolic one is already rolling up, and that front runs a little bit. We've seen the worst of it back here. It crossed its own 10-period moving average, is starting to improve. You're seeing that like a cot of two and go. It has to get above the zero line for this really to be interesting, but that's a healthy and favorable idea. The fact that this didn't fail further suggests that it might be ready for the upside. We'll see. Volatility is declining by both measures. You know, ATR divided by price. This one gives you the ATR percentage. And this one gives you the standard deviation of essentially the size of the frog box, the standard deviation of price. So you can see by both of those measures, volatility is declining, and that usually leads to an improvement in slope. They are inversely correlated. This tells you how bad the previous 30 days were, is that slope was the second worst in the last 10 years. That was COVID. That's how bad that previous 30 days has been. That sell off to below 20%. That caught a lot of people by surprise that don't understand stats. And we can see here that caught a 2 formation in the slope of the 30-period regression line. That's good. Now we want to see the 90 start to roll up. That will be the next tell, when the longer term slope, which got below -3 sigma, starts to roll up. That's how bad this has been. The fact that it didn't fail is a positive sign. Maybe it's spring in Camelot here. All right, that's everything I want to cover on the weekend report. Let's go to more sniper trades of the day. So this is the one we just saw, that Citigroup, excuse me. The TC 2000 alert. And again, the secret of this one is that size of that gap meant that XLF was the best performer of the sectors, and that Citi was better than the sector. So when the market is up, but the sector is better and the symbol is best, trade the symbol. And here's your COTA 2, breakout to a new high, standard risk, and then you get your standard R captures just using the PSAR and your manageable risk box. And that's where the 7R came from. I mean, that's a no-brainer right there. Those PSAR dots make it easy just to do as you're told. All right, this is peak. This is the one of those healthcare. This was like Mr. Toad's wild ride today. So this one started with, here was yesterday's close. Here was this giant gap up, which then immediately started failing. When it moved a standard risk box off the top, I was very tempted to short it, but I was already stalking finance and the Russell, and so I didn't take the individual target. I just noted it and then was immediately disappointed that I didn't, because there's, in the same bar, there's already 1R that I missed because of span of control. Fortunately, that happens all the time. Oh, now there's 2R that I missed. Oh, there's 3R that I missed by choosing those other targets. So you can't get them all. So here's 1, 2, 3R before that bottomed out off the standard risk. So big gap up, selling off. That's like a hybrid frog. That's 3R we didn't get. What are you going to do? You're going to keep doing your best. That's what you're going to do. Now this time, having watched 3R escape, this thing rolls down, rolls back up, and then starts to roll over. So it comes through the dragon, hits that rising PSAR. So now I feel like I'll short it. And now I'll put the standard risk box on it. And now if it breaks below here, that thing is really going to collapse. So here's the tactical trading region. I really want it to go through there fast. Quick, fast, and in a hurry. It doesn't. It immediately reverses against me, and I take about an R loss. It immediately rolls over again. So I played this short. It reversed against me. So I cut it, take the 1R loss. This thing then runs all the way up here and then runs down again, breaks through the dragon. So I get short here. Standard risk. Immediate loss. And now it breaks out to the upside. So I've got about, let's see, this one's about -1. This one's about -0.5. And now it takes out the PSAR. So now I'm long. Standard risk to the downside. And I'd like to see it get up into here and test the intraday high. That'd be nice. I thought about a second position, but this thing, to be honest, was so volatile, and I had some other positions on in other symbols. This was a span of control. This is one I just like, well, I noted it. That's where I wanted to put a second one on. I didn't have any capital and instantly regretted that. So now I'm noticing this is sort of like leg 1, and that's leg 2. And now it is testing the opening and the high of the day. And now the RL10 is rolling over. And so and then I'm noticing that the PSAR is coming up this way. So somewhere in here is the decision that's got to be made. Now, where I am right now is I've got this to the good from this entry against that risk. So that trade already has taken care of those 2 losses. So I want to be judicious and stay ahead of the game. So now I'm stalking that exit. And then it fails to fail. And I thought, man, what a marvelous opportunity this would be. This is one of those where the pullback and the recovery was so strong that the RL10 never even flinched. It just started rolling back up. And you've heard me lecture at you for weeks at a time now that is a very strong signal. So I considered a second position there, especially now that I'm above the high of the day. I didn't take it. Still a little gun shy. Instantly regretted that one. So now I'm looking at 3 legs up. 1, 2, 3, and it's starting to fail. And here comes the PSAR. So I should be getting ready to get out of this thing. Yeah. And just take the PSAR exit. So with 1 unit of risk, there's about 1, 2, maybe 3. So that pays for the -1.5. So if that's +3, we're about plus 1.5 now on this one. So doing okay. Feeling better. Thought strongly about getting short here, but I didn't want to get short this very, very strong moving sector. So I looked at it, elected not to be short, and then it moves out this far in my favor. So I'm already regretting it. But again, learn to live with that and let it go. It rolled over again. And again, I ignore my own advice and say, look, when the come on, dummy. When this little rebound fails immediately and starts to fail again, notice that the RL10 just came down, went sideways and started to fail again. That makes this a really strong downward signal, which I didn't take. Now I'm feeling really dumb, but I feel that way a lot. So I finally say, look, after the next signal, this little rebound doesn't even get near the edge of the dragon or here. So I finally say, all right, it rolled over again. Let me finally get short with a standard risk box. Now that I've missed the easy money, let me go ahead and get short now. So now when I'm looking at this, I'm thinking, well, if this fails, coming back to here would be easy to see. So there's still standard risk of 1 and then probably 1, 2 to the downside. So there's my 2 to 1 reward to risk. So it's still justified. That would not be a surprising move. That would still be within the norms of the day. I think I should have been out of that here and then re-entered there. But what I noticed was that the RL10 barely moves, so that's still bad form. Should have exited here and re-entered. It worked out in my favor. Could have added another position here, but I felt so fortunate and that I didn't get burned and was disappointed with my performance. I didn't want to get aggressive, so I didn't take that one. So I just took the standard exit, and this time I did as I'm told for about 1 hour. This is now a stop and reverse because we have the harsh winter, bottoms out, crosses the baby dragon, enters the dragon, leaves the dragon, hits the long PSAR in reverse. That's an SSC, supported spring crossing, standard risk box. Up we go. And no lose plus dinner for 2. And at this point, I was trading that thing so poorly, I just was happy to get out of there with my skin. Call it a day on that one. All right, next one, Corning. So this was another TC 2000 alert. Early in the day, tech wasn't bad. This gap was one of the stronger ones in the S&P tech companies, reversed nicely. So now I'm thinking somewhere up around in here, if it can make a new high of the day, maybe I can get one of these. And I'm noticing the nice PSAR trail is rising. So stock in that entry. Makes the new high of the day. And this is your like emerging dragon. And here's a Kata 2. Here's the standard risk box in Corning. That's the R10. Take a half an hour gain as when it hits the PSAR. Thought really hard about the Kata 2, should have taken it. It's a relatively new symbol for me, so I didn't. I took the next Kata 2. Standard risk, quick loss. Took the next Kata 2. Reasonable gain for about 2 hours. That one surprised me. It kept grinding. So that's Corning. That actually feels pretty good because the because it outperformed the tech of XLK and the Qs, and the follow through from the gap up and go was nice. So I'm going to stay with Corning on Monday just to look at this as a continuation. I really like the orderly move, and I like that it was just like a 10-cent risk on a $30 stock. Here's ARE, that's Alexandria Real Estate, the healthcare real estate guy. This one, like Peak, we saw earlier, had the, it wasn't as dramatic. It had the nice gap up, sold off, and is now finding support. So now I'm getting ready to stalk this thing. Like to see that. It's got a nice rising PSAR. That would be nice. Caught a 2 in the RL10 reverses. Standard risk box. Standard PSAR exit for about 2R. Caught a 2 entry to the upside. Quick loss. Thought about the Kata 2 reentry, but this was so quiet and passive that it felt like it was done. That's where I would have had to have gotten out if I'd gotten in at the first yellow dot and missed the last closing move. Now, that's too late in the day to start a new position anyway. If I'd have gotten that, it would have been a matter of pure luck. But this positive gain after a nice gap up and a pretty good intraday move, and there was like no sell-off. The fact that people bought this in the last few minutes tells me there may be a nice bump in the morning on Monday. So that'll be on my list as a continuation play. This is Genomics. This is a ETF by Kathy Wood. It's hard to short these. You can play an inverse on it. But I've been watching biotech and this one for a while, so I finally decided to give it a try. This is where I wanted to short it, but I had span of control issues. It started dropping like a rock. This is where that standard risk box would have been. So again, that missed the 1R on that one. Missed 3R on that one. This would have, if you had taken that trade in the early movement, that new breakdown, new low of the day, it's a risk box off the PSAR, cross the dragon. You get that kind of thing, and then a 1, 2, 3. You take that exit all day, and you cash 1, 2, 3. Just get paid early, and see what that does to your psychology for the day. I wanted to get short again here because now, after that first short that would have worked, this comes up, can't get through the dragon and starts failing again, and the RL10 is rolling over. That felt like a natural place to get short. It's hard to short this one. You can trade it the inverse. It's called SARK, S-A-R-K, which takes the opposite position from all of her, from the ARC's positions. That's where you would cover that trade, because it breaks down, then immediately starts rocketing back up. So you keep half of it. So you should be keeping that trade. So that's 2 that I missed. And now I'm watching, the reversal. So we're getting close to the long side here on an SSC. get the SSC standard risk. That one surprised me. I thought there were a number of places in here where it was just going to fail, like in here and in here and in here and in here and in here. I could have taken that one, but I was already pretty impressed with that move, so I gave it a little more room. The RL10 had barely moved, and now everything came to a point, and so that's 1, 2, maybe 3. So you don't have to get them all, and it's easier to trade this one on the long side. And I felt pretty good about that. That's the first time I had traded that one, so I was content to stay on the long side and hit a fat pitch. This is the Russell. So this is one that was moving early. This got most of my attention early. Great big gap up. There's the close. Great big gap up. Runs up, runs down. So there's my opening range 3. Waiting for a breakout of that. In the next couple bars, it breaks down. So I get my new low of the day, standard risk box. Now my target's going to be down here. So I'm looking for 1, 2, maybe 3-to-1 reward to risk. So that feels like if it just closes the gap, I'm going to do okay. It does all of that and then reverses right where you would expect. So we'll take this 1, 2, 3 exit, cash it. It runs up into here. So now I'm looking at the declining PSAR. And if that price continues to go, I might end up getting long somewhere around in there. But I've got 1, 2, 3 R in hand. So I got some capital to play with on that one. There's a quick PSAR flip and a quick 1R loss. It reverses again, so I'm long again. I gave it probably too much room, but I thought this was going to go. And wrong again. So this goes up, it crosses over. By the time I get out, I'm here. So I get a no lose plus dinner for 2. So take what I can and be happy. Caught a 2 re-entry. Double bottom. Higher low. Crosses the dragon. PSAR still rising. Buy it. Standard risk. Now it's got to get above this. If it can get above there and go, that's great. If it gets above here or above here, that's really going to be good. Really good. And standard exit. So I was pretty happy with this. It got above the emerging dragon. So I'm in the money. It gets above this level, in the money. Here's that RL10 barely flinched and kept going. Probably could have had a second position there. Missed it. Then it peaks out here, comes back down and hits, and I'm happy as a clam on that one. 1 unit of risk, 1, 2, plus 2 on that one. Miss the Kata 2. Miss the short. Miss the Kata 2. By this time, I was already monkeying around with those other ones, the ARE and Peak and Citigroup, and it was a span of control. And those were moving in such an orderly manner. I would actually rather play them than a index, which is gets kind of choppy during the day. All right, this is Alcoa. It was also like Mr. Toad's Wild Ride. Here's the close. Great big gap up, rolls over. When it moved that far off the top, one risk box, I was tempted to short it. I missed it again. This is where the natural recovery would have been on that short. But now I get the SSC, so I'm long from here with a standard risk box. And let's see this go. I'd like to see it get up into here. If it gets above this one, it can really go. It does all of that and then comes back to settle on the PSAR dot, and I'm happily taking that trade. I would not be offended if you got out there. Then that would have probably gotten you back in, and then this probably, you might have gotten a little piece or you might have scratched. But at a minimum, you come out of this trade with about 1, 2, and maybe a third one. Caught a 2 re-entry. It did not fail. It just paused, resumed, crosses the dragon, so long, standard risk. I'd love to see it get above here. It's trying. And doesn't. So we just take the PSAR flip exit. I wait for the second leg to be short. So this was possible to be short here. I wanted to see it fail, and then resume. So that was the short. That's the standard risk. Quick loss. Quick stop and reverse to the next form of the Kata 2. Standard risk. Let's go. Quick scratch. Starting to run out of steam. And missed the last move. So Alcoa gave a little burst early and then kind of just dwindled. Final one, this is Ethereum. You can't short this one. You can short the Ether coin, but the Ethereum Trust, you can only go long. So this had a nice gap up for the second day. That's good. Rolled up. I'm waiting to see, where is it going to find support? Somewhere in here? If so, then I can play this. And when it crosses the declining PSAR, so maybe I can get long somewhere in there. That's my idea. It recovers quicker. So you get a Kata 2, takes out the PSAR, standard risk box. Let's go. One-hour failure. I considered the Kata 2, but after just getting burned, I wanted to get back in the zero state. I took the next Kata 2 because if it was going to fail, it should have failed right here, but it didn't. It held and made a higher low. So that's a Kata 2 reentry. Standard risk box. Let's go. Quick scratch. Kata 2 reentry. Half an hour. Thought about the next Kata 2, didn't take it, and regretted it because that's what I get for knowing better. So not very good on that one, but didn't lose much, maybe broke even. That's the price of thinking that I know better and getting late in the day. How much could it do? It's been stuck in this thing all day. Oh yeah, that's right. That's what it can do. They all look the same leaving the station. Live and learn. All right, so those are the sniper trades of the day. Some good lessons in there. Citigroup and Corning were especially good. All right, here's Luke. He's branching out a little bit, getting bored with the 5-minute Aussie, perhaps. Here's the DAX contract for difference on the 3-minute. Here's where he starts trading. He's sad that he wasn't trading in here where the PSAR flip box would have gotten paid immediately. But here's the next PSAR flip box. So he gets long. Good exit here. I think you should have been out here, but you get about the same exit for 1.3. Tries the short side. That was a potential alert to the downside, but he takes the PSAR exit, so he gets paid. Stop and reverse. Not much left. Micro loss and a reasonable gain for 2.7 on a brand new symbol for him. Very nice. Here's Luke on the more on the 3-minute DAX. Sees like the fake one, catches him for minus 0.6. A little slow on the reentry. Scratches. A little slow on the reentry, scratches. These are like fake one and go two, so you can get long here and try that. And when that fails, you can get short there and try that. Still not losing much. Micro loss, scratch, scratch. It works. Waits for the PSAR flip. Probably stayed too long. And gets micro paid. So 0.7. So that's about 3.5 in the DAX on a new symbol. That's not bad. Back to his trusted 5-minute Aussie. Here's your Z3 pinch. This is fake one, go two. He gets the second half of that leg. Slow getting in on the PSAR flip, should really be long here, but still got enough to get paid. Gave back a lot, but 0.6, we'll take it. He waits for it to cross the Bollinger Band mean, gets short, probably should be out here, gets paid. This rollover is a collapsing dragon. We should be short on that one. Gee whiz. This one rolls up and fails again. So now he's short, stuck around too long and took a loss that should have been at least a scratch, but makes up for it with this nice trade. Gave back too much, but still clears 0.9. Slow getting back in, should be here, but he gets that one before it crosses the VWAP. The optimum exit he notes was here. He takes that one for 0.7. So still 3.2. With best practice, this should be somewhere around 5 or 6. If you add that one, this could have been 8. But he's also got span of control because he was working the DAX and some of those other ones. So this was from yesterday. He didn't have time to post it. So this was 8.5 yesterday. Here's the Z3 pinch. The breakdown works. He gets a second position, covers. He was not in the market, so he doesn't even get that or this or that, but still gets paid and brings home 8, missing the 2 or 3 fattest moves of the day. That could have been 20. In case you wanted to feel good about yourself there. So now he's trying the M2K. Using the 200 ticks. There's leg 1, leg 2, it rolls over. So he tries the short, quick exit, reshorts it, scratch, reshorts it, moving pretty fast. That may be a speed issue on this one. The short should be here. He gets this one. That thing's moving faster than you're ready for it. Although you did get paid nicely on this one for 1.1. I think that's too fast. If you're going to do this one on 200 ticks, I don't think you can have those other things distracting you, because when that starts to move, those bars fill pretty quick. Here's pawn on the US and I think the Canadian. Yeah, US and the Canadian on 3 minutes. Quick scratch, nothing there. He gets the Z3 breakout. This runs up to Z3 and then he waits to get out to the PSAR. So I think with best play probably on this side of the dragon. So you didn't give back that much, but it starts adding up. I'd have been tempted short here and probably tried to scratch. When it breaks out of the dragon, maybe that's still pretty good. I'd like to see you out here. That bar probably happened pretty fast. So I think he takes a break and resets. There's a Kata 2, a little slow, but still not bad. Got paid, quick loss, got really well paid in here. Oh no, I guess no, maybe we didn't get that. Oh, that was a should have been. Right. He said should have taken that trade, then should have covered right here. And that makes a -1 day. That would have probably given you +3. Yeah. So follow the pattern. Do as I say, not as I do. Can't get them all. That looks premature to me. Oh no, I'm sorry. I thought you were getting longer. That's a short here. That looks good. Quick, no lose plus dinner for 2. When this breaks below here, that's where you get short. Not here, so a little slow. Then that at least scratches. And then that's your signal for long side. That's really good. Great short, good cover. I think, yeah, you were trading emotionally here. Quickly just exit it. Use this time to reset back to the 0 state. PSAR flip box, quick loss. That's where we should be long. Good short, good scratch, great entry, got paid, and good job not chasing. 0.7, we'll take it. There was some work to do in here. Let's see. Here's the DAX. Short, got paid. Short and scratch. Short, got out fast. This is where the entry should be. PSAR flip box in the usual way. That's almost like a slow fake one, go two. So remember, PSAR box. And I would say get out here, probably re-enter and scratch. Great entry. And there was your exit. Yeah, it could have been a second position when it breaks above the emerging dragon. When this shelf doesn't fail, maybe a second or third. And then you'd have to get out here if you got multiple positions on. Otherwise, that pullback would really hurt you. But still, that's pretty good on a single position. And good, 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 pretty good. Woj, you got what was available. I think you got what was there. 10 for the week. Doing something right. Stay with it. Chi Wang Chong, this is Alcoa on the 1 minute, crushing it. I don't think I got this one short on the 3 minute, but he got it on the 1 minute. When it broke below, his fill was here, so he takes the box. When the RL10 reverses, crosses the dragon, he's out. PSAR flip, crushes it. Kata 2, crushes it. Kata 2, crushes it. Kata 2, crushes it. Alcoa on the 1 minute charts in 90 minutes of trading. That's why I love Alcoa. Love it. Microsoft here with Woj. This is so that he doesn't get too distracted. Got what was available. Got a little choppy. This is so choppy in here. That's I don't blame you on that one. And this was actually a pretty tight range in Tesla. So good to stay out of the chop. All right, that's everything we got for today. Long lessons, but some good ones on the sniper traits. They all look the same leaving the station, but don't second guess yourself. When you make a decision, live with it, study the numbers, make a note to yourself, but forgiveness and gratitude. Tomorrow morning, 8:30 for the storytellers, 8:30 tomorrow evening for the swing trade reviews. Sunday morning for the Creativity 202 session. We're on lesson number 4 now of 30. Still time to join. It's turning out to be amazing. So keep up the fire. Good job, fellas. We shall see you tomorrow. Yeah, Nicole, it's always Central Time. It's always 8:30 in the morning on Saturdays for regular story time.